How's it going, everybody? Welcome to our evening show. Today is we're going to do a show on small accounts. It's something that I've wanted to do for a little bit that I've talked about, so I want to kind of talk about it some here. Spend some time talking through the ideas of small account trading and what, at least for me, it took to get to that next level. As a note, I am not a financial advisor. I don't offer stock picks, investment advice. Everything you see here and here is just for entertainment purposes and should be viewed as that. And if I do have to get up randomly in the middle, it's because one of my kids woke up and are crying, and I'll be back really quickly if that happens. So if you see me get up, I'll let you know, and I should be back within a minute or two. They're sleeping right now. So, on that note, let's get started. Small accounts. So, what do you need to make a living as a day trader? Doing the strategies that we do as a scalper. We're scalpers here. Generally speaking, for the most part, we do small scale or small time frame scalping using options as a vehicle to trade the stocks moving. And in order to do that and make a living, the amount your account needs to be at to really get to that making five figures a week or a day or a month or whatever it is to where you can get to that point, depending on the size that you take, it's about 30 grand, 25 to 30 grand. Once you get your account to 25 grand, you're above PDT. And you can constantly trade the same money over and over and over and over. So it allows you to take the same setups as they're setting up and to play the momentum in the names. Well, a lot of the struggles for people, including myself, when I started trading in February of 20 or March of 20, when I started doing these strategies and trading with this style, is you don't have 25 grand to just sit into account and drop. So you put what you have in there. For me, it was 8,000. I had $8,000. I always put money aside and put it into an investment account, and I just kind of had it going there. And I just savings account, investment accounts, and I just had stuff set to the side every month that me and my wife did. And so when the pandemic hit, stocks were dropping. That account was dropping. I took the money out and thought I could probably do better in the recovery because if you bought names that had tanked and were going to go back up, you could probably make more than what you would have made putting it in those accounts, just in the mutual funds. So I decided to do that. At about that same time, my dad, who's in the room, told me about this room, told me, hey, you got to check this out. And I went and checked it out. I ended up and then I ended up looking at these strategies, listening to the videos that were taught in the T3 Live Room by Mark Melnick, and a great teacher, mentor. And I watched them, listened to them, and I'm like, this makes sense. And this seems like it'll work. And I just went in and I just started trying it. And I had $8,000. And I did the strategies like, okay, this is a strategy, I'm going to try it. I took maybe a month or so to kind of watch things and see how the room worked, how people talked. And I'm telling this story just to tell my story of trading, so you don't think I'm just somebody with money who came in here, but that I started from a small account. And there are other people in here who started with 2,000, 5,000, a couple $100s or something like that, and they've eventually got to the point to where they're profitable and making a living doing this. So I started doing them, and I found what I would consider instant success. Not that I instantly blew up within a month or two, but within a month or two, I was like, you can do this. Like, this is totally possible to do. And if I can be consistent and find consistency in this, find names that I like, I can eventually get to a point where I make a living doing this. And over the course of the summer, I think over the first, so I started with 8,000. I would have to go back and look, but I think by like the end of the summer, I had about 16,000 or so. And then I just continued trading through the fall. I had up months and down months, and then by December, and the name I traded the most at the time was Apple before they did their split. And it was an easy, the one and done worked really well in Apple, and I would just trade the one and done in the Mark One and the first Mark Five in the morning in Apple. So I did those three strategies. I might have done the first Know Your Limit 8. So I would trade the first one and done to happen in whatever name was like hopping in the room at the time. And usually for me, it was Apple. because it was a name that was easy to trade and to catch 10, 20 cents on 10 contracts. And $8,000 account, see, this is why the name is important, and I'll come back to this later. But Apple was important to me because it was a name that was easy to trade, to make 10 cents on, 20 cents on a strategy working, and then sell. So it was instantly right or wrong, and you usually weren't tagged really hard if you lost. It's kind of like it is now, but it used to move a little bit better. So I would So I would play that, and for about 15 minutes, 10 to 15 minutes the first of the day, I would play one or maybe two names. I had a Mac, and I would trade from my cell phone data, unless it was on Fridays. I would trade from my cell phone in the parking lot. I would put my phone on the dashboard, connect it to my Mac, and I would trade, and I would do 3 or 4 trades. It would be the one and done if I really liked it. Some days, a Mark 1, the first no you limit 8, and the first no you limit 21. And sometimes that coincided with the Mark 5. It was super sketch. And then days when I work from home like 2 or 3 days a week. I would do the same thing. When I was at home, I would trade the first 1 to 2, things, and then that would be it. And I would consistently just get those small wins and definitely losses. Had red days, had green days. Some days up 500, some days, up 200, 100, 200, and I just kept letting it build, and I would kept doing that. So I didn't do it from the iPhone. I used the iPhone's internet to connect to my laptop. So, oh, my kids are making noise. So after doing that and being consistent for what's it, March or April, whenever I joined, April to December. Around December, I hit that 25,000 mark. And I think I was at probably 26 or so, and I turned margin on so I could continue to trade throughout the day. And it was early, it was early in December. It was December 10th or December 9th when I had my first big day. And I could go back and, I mean, I have a Tesla chart here. Let's see if I can go back to then on this chart and see what was happening. Let's see. Just back in this time frame. Here you go. So it was around here, and I don't remember the moves, but I do remember that I was trading Tesla and I was making money. And I was at the hospital. My kids were getting born. I brought my computer. My wife was in labor. We were going through all that stuff. And I was just sitting there and we were waiting and kind of hanging out, talking. And I just got on the computer and, let's see what happens. And then that week that my kids were born, I had my first 5-figure week. I think I turned, just trading there, I think I turned, if I have to go back and look at it, but the 25,000 to about $40,000. And then later on in that week, or later on that month, when I got back from the hospital, I had slept. The in-laws were here and they were watching the kids, and my wife and I slept. And I got up, I came downstairs, and I made a couple trades, and then I had my first, 5-figure day, and then my first ended up having my first 6-figure month in the month of December. And that was from an $8,000 account to, at the end of that year, within 1 year, within under a year, I had 6 figures. And I did never sized up. I was always doing about 10 contracts. And I think at some point I, may have sized up some, but I never sized up through that whole time. I was just consistent throughout the year, taking the strategies that I had the most confidence in the names that I had the most confidence in. And I didn't have a lot of confidence in Tesla. I started with 10 contracts in some names, like Apple. 10 contracts in Apple or 5 contracts in Apple is a lot different than 10 contracts in Tesla. So the name that you're trading matters. And for me, I knew that if I could, and I thought long term when I was doing the trading. And since then, I actually quit my job. That next, after the new year, I quit my job, and I ended up becoming a full-time trader in February of the following year. And since then, it's been all I want to do. There's no chance I'd go back, I don't think, to working. Something bad would have to happen for me to go back to working in an office. But I went from 8,000 to 6 figures in under a year. And it's not because I'm an amazing trader. I have some secret with the market. I have a 2 to 1 stop loss or any of this other stupid stuff that they teach out there. It's not because I have 9 names in the pre-market or 15 names and all this stuff and I'm buying all of them and I'm, selling the losers. I don't know what all these dumb strategies that people do out there. And some of them work. I'm not insulting all of them. There's plenty of stuff out there that works. There's plenty of different strategies that are effective. I didn't have any of those. I had these simple strategies that we do here all the time. And I found ones that I understood that were very simple that I could spot in an instant and make money within the first 10 to 15 minutes of the day and log off. I would log on and then log off. And I just built up those winning days until I could get to that $25,000 mark, which would then allow me to just constantly trade these strategies and make more money. And now that's what I do. So that's my story. That's where I come from. That's how I got my account there. It wasn't by doing anything crazy. It was just by slowly and steadily just winning over time. And then eventually when I got my account a little over 25,000, I turned on margin and then I just started doing that. And I didn't size up when I did that. I just traded. And then you just start catching names. You catch the same strategy a lot. You learn how things move. And it's much easier to start making money and to do this as a living. So now that I've told you my story, what do I think is important and what do I think is the most important thing for traders with small accounts? The first thing, the number one thing, in my opinion, is to find a strategy that works for you, that you are comfortable with, that you understand. Now, it depends on how much money you have, but you could have $5,000. We can use that number. With 5 grand, you could trade almost every single name that we trade in here. You could trade Facebook. You could trade Apple. You could trade Tesla, honestly, with 1 or 2 contracts. Depending on the day, you could. Tesla's options are much more expensive now than they used to, but you could trade that name. I wouldn't always recommend it. I wouldn't recommend Amazon. There are other names that you can trade. Just go find the options that work. Find names that work. You can trade AMD. You could trade NVIDIA. You could trade Moderna. You could trade about 90% of the names that are large cap names on the market, and you could apply these strategies to them, and you could make money. So find first a strategy that you like. How do we find strategies that we like? Well, one, you can just review them. You review the strategies, you know what they are. I'm going to post some videos soon with my favorite strategies, how they work, what the rules are and stuff. You can review those strategies. Watch the market. When people in this chat room are calling out names, and they're like, this name, turn on that name. Open up an option contract. Just watch how it moves. When you see a Mark 1 happening, when you see an M1, when you see a green takes red, when you see a 21, watch how, and it triggers, watch how those options move. Watch how it trades. Is it whippy? Is it throwing you around? If when you get in, is it kind of consistent? Does it move a little bit slower? Does it move a little bit faster? What do you like as a trader? How do you like to see something react? For me, I like to be instantly right or instantly wrong when I buy something, so I like to be up or down money right away. It kind of lets me know how I want to trade the rest of that trade. So as a small trader, identify by watching the market and watching names and watching contracts how they move. Generally speaking, we buy contracts that are really close to the money, maybe like in the money by 1 or right at the money, and that are whole numbers. But find something like that works so that you're like, hey, when I buy Tesla, I know what I'm getting into. When I buy Facebook, when I buy Apple, when I buy Q's contracts or SPY's contracts, I know what I'm getting into. Like, this is how it's going to move. I understand that. Like, I understand this is going to be a little bit of a hold. This is going to be a very quick sell. I'm going to be, expect to make 5 to 10 cents, 30 to 40 cents. So you're not like a deer in the headlight when you buy it. You're not looking around like, well, what did I do? What did I do? Am I up? Am I down? So you can kind of click, have a good idea about where you're going to be at, and then be ready to sell instantly. So the number one thing you want to do is, I think that is identify the strategies that you want to trade and the names that you want to trade them in. And then find out which names are hot, obviously, and trade them when they're hot, and don't try to force something if it's not. Second is as you make money, and this is kind of down the line, you don't have to size up. The trick is once you start making money and you take a $5,000 account to a $10,000 account, what you're going to think is, okay, I could buy 2 contracts. Now I can buy 4. Now, I'm not saying it's wrong to do that. Maybe you should, maybe you shouldn't. But sizing up is not the key to growing your account quicker. Sizing up is a good way to lose what you've made, because what happens when you size up, especially in a small account and even in a larger account when you do it by a multiple of like 2, is you start thinking about the money in the middle of the trade. And no matter what it is, and it's almost impossible not to do, is that money starts becoming a factor in your trading. The money starts becoming a reason that you're making a choice, or the reason that you're buying a contract, as opposed to this is a good trade with a good setup and a name that I trust. So if you go from 5 contracts to 10 contracts in trading a name, there's a good chance you're going to make more bad trades, which means you're going to tilt, which means there's a good chance that you're going to lose your money because you're not able to actually handle the increased mental pressure of that extra money. And so you should identify that in yourself, and you should, if you go from 5,000 to 10,000, here's what I would tell myself to do is think about the long term, and this is what you should always have. If you're doing this, what's the goal of your trading? Are you trying to just make a little bit of extra money on the side? Are you trying to, or are you trying to make this a career? Are you just here to gamble and just to, win or lose big because you want to rush? What's the reason you're trading? If the reason you're trading is to create long-term stability over the course of a career, if you're is to actually make a career doing this, is to be consistent doing this, not to have blow up days and all this other stuff. You're going to have some, but to limit them. Think about why you do it, and then take a step back, because as a small account trader, what you want to do is to get to that $25,000, $30,000 level. So take a step back. If I make, how much do you have to make a day? If you want to make it in a year or 2 years, what's 2 years in the course of your life? Depending on where you're at, it might be a lot, might not be a lot, depending on how old you are. But, or even how young you are. We don't know how long we have. But how long is it going to take you to get to 25? Not every day, oh, I made this, oh, I lost this, now it's going to take me this much longer. But if I just consistently chop away, and I just consistently make money, can I get to $25,000 in a year or 2 years, making a couple $100 a day? How many trading days? How many trading days are there in a year? Anybody know? I could do the math, but I'll pull it up on my phone. I should know this. 200, 252, 250. Okay, well, let's just say 250 for the sake of 250. So, $20,000, yeah. Not including holidays and stuff, so you knock out the holidays and other stuff like that. So, but we'll just say, minus holidays, yeah. Let's say 225. Let's say you can trade 225 days out of the year. So you have a $5,000 account. $20,000 is what you need to get to there, divided by, let's just say, 225. That's, if my math is right, $88 a day. So if you can make $88 a day, and let's just round that up to 100. So let's say 100 times, 225, that would give you $22,000. So if you can make $100 a day doing the strategies in this room, the simple, easy, effective strategies, do a Mark 1, do the first 2-minute green takes red, do the first know your limit 8 and the first know your limit 21, those strategies on a name that's trending, that's working, that the room is doing, and you take those 4 trades with, it doesn't matter the size of contracts, you're telling me you can't average $100 a day over the course of a year with a small account. You can. That's all it takes to get to that level to where you can do this for a living, is if you can average $100 a day. So take a step back. Take a step back and think long term. Think, what do I need to do to this time next year be at it or close to it? What do I need to do to get my account to $25,000 to where I can do it? And then put that number down, and do not try to hit a number every day. You should never look at a number. But this is to give yourself that generalized, like that bird's eye view of your trading. So instead of having like a homed in view on, I have to make it all now, and I made $1,000 and I lost, and all this other stuff that can go through your head, or I have to catch it here, I have to catch it here. No, what you have to do is you have to be consistent, and you have to be consistent over an extended period of time. You have to develop consistency. If you have a $5,000 account, you're going to make 12, and then you're going to go back down to 9 possibly, and then you're going to have to make that 3,000 again. Never look at things like that. It's just about that steady consistency over the course of time. Some days you're going to have losing days, losing months, losing weeks. You might make 10,000, lose 2,000 or 5,000, go all the way back. That's fine. It's just a lesson that you learned. And then you start over and you just keep being consistent. You learn from the mistakes that you made, because if you lost, you did something stupid. Take a note, a little sticky note, and write on that sticky note what you did, and stick it next to your computer so you know not to do that. Maybe you sized up. Maybe you went too aggressive. Maybe you didn't stop when you should have. Whatever it was, maybe you held a trade too long because you couldn't handle the loss. You thought, oh man, this is going to blow up my week. It's Friday. I was up $500. I jumped in this Tesla trade. It didn't work right away. I gave it too much room, and now I'm down 500. So now I'm down. I gave up my whole week, and then I held it. Now I'm down $700. Half of the people in here have done that. Write that down. Don't lie to yourself and allow yourself to get away with that. Write that down and tell yourself, I did this wrong. This is what I'm doing wrong. And along with writing it down, and you can stick it somewhere where you can see it, but writing it down has to do with journaling. So that takes me right into journaling. I journaled when I had an under $25,000 account. And I journaled even whenever I have a hard time trading and my stuff slows down, I start journaling again. Maybe I should do it all the time, but I do too many trades to journal all of them. Honestly, I'd be in here all night. But there's some software out there. You could use Excel or something, but there's also software. It's called TradeView and TraderSync. Check those out. I'm not affiliated with them, but I have used them, and I find them extremely good tools for journaling. You could put notes. You can do all that, especially if you're only doing 4 or 5 trades and you're not journaling, you're wrong. Like, you can journal 4 or 5 trades. You can look back and see what was wrong and to see what was right, and correct yourself. You can see what your most efficient strategies are. You can gain confidence in your strategies. Man, when I take this strategy on this name, when it's above the first 1 or 2 minute high, I have an 80% win rate. Okay, nice. Maybe I do want to take 4 contracts or 5 contracts next time I do that one. I have a very high hit rate there. You can start adapting your strategy to your strengths. You can find names that you like and strategies that you like. So if you're got a small account and you're only doing a few trades, you should probably be journaling. You shouldn't be just listening to what you're saying in your head and not actually putting it down, because what we tell ourselves and what's on paper is often 2 different things, and we lie to ourselves. Very often we lie to ourselves, and we're not being honest with what we're doing right, what we're doing wrong, and sometimes putting it down allows us to have that, to gain that, what's the word I'm looking for, honesty, and it keeps us honest. It helps us remember why we did or didn't take. Man, I was so stupid for taking that. Or, you got to give yourself grace, but maybe I was so rough in taking that. And it lets me know, hey, you did this yesterday, you lost money. And it helps you kind of practice that discipline that you need to become a better trader and to become more consistent. So know why you're winning and know why you're losing. And just on the short note, that's really the biggest thing you need to know. And there's some other stuff I'll say, but just, you don't need much more than that. We've talked, a lot of the stuff that we cover here and that I talk about in these videos are what you need to know as a small account trader. Like, we've talked about different personality types. How do you trade? How do you view things? How can you adapt as a trader to be more aggressive or less aggressive? Or to be more strategic when you need to? Or to actually take the proper setups? So knowing yourself is just a big part of it. Knowing the reason that you do this, having that long-term view, having, not having to make it all in one day, but trying to view this over the course of 5 years. Man, if I only make this amount over the course of 5 years, look where I'm going to be at. Look at all the debt I'm going to be out of. I could be completely debt free. I could, have a bigger, I could be helping people. I could be spending more time with my family. I could work less hours. I could, not have to stress. I could pay these medical bills. I could support my church, these charities that I really like. I could, whatever it is, I could do all these different things and keep the reason that you're trading and the reason that you want to trade in front of you. And don't forget that when you start making or losing money, and then the picture of the money comes into view, because that's really what's going to wreck you, is when you start looking at the money and thinking about the money. And I'm going to scroll back and see there was some questions people asked beforehand, so I'll try to go over them. And another thing, and this is a thing, depending on your financial situation and where you're at with money and where you're at with stuff, $100 a day, gets you to that 25. If you have a $5,000 account, less if you have whatever. So make set money aside in your normal account. Like, if you're eating out for McDonald's or whatever else, 10 days, 5 days, a month or whatever it is, or you get that Starbucks coffee, or you do whatever else it is. How about you set some of that money aside and you put it into a savings account so you can add that? I'm not saying put that in and trade with it, but add that to the side so when you get your account, let's say over the course of the year, you make 18,000 or something like that, and then maybe if you put that extra money aside, and you budgeted throughout the month and you put that money aside, then when the year comes, you might have $4,000 or $5,000 to drop in there to get you over that PDT threshold. So it's another strategy that's not even market related that you can try. If this is really that important to you, and I understand everybody's in a different financial situation and all that, but it just depends on where you're at. Take your time, save your money outside of the market while you're making money in the market, and that could give you that little bit extra cushion that you need to when you just feel like you need that little extra bump or something like that. You can put that money in there, and maybe it doesn't make you feel so bad after a loss, or maybe it allows you to kind of view it, man, I only have to make $50 a day because I'm putting $50 a day in my savings account. Maybe it allows you to do something like that, and that gives you that kind of mental break that you need to accurately trade and to efficiently trade. So let me scroll through and see if I have a few questions that I didn't answer beforehand. And this video itself isn't as much about strategy, more about that mentality, more about that. There's some strategy, but more about just like the mindset I think you need to have to be that successful trader is this. And I'm sure some people will have some different things. Someone said, what market should you trade with a small account? I don't know if by market they mean stock or what. And I think you could trade pretty much anything. And that's why at the beginning I said, watch them, watch how they move, know what you're comfortable with. I was comfortable trading Tesla with a smaller account when it was good and I was making money. And I do have that more aggressive personality though, so it's okay for me. For other people, it might not. Apple, could be a good slow-moving name. You can make 10 cents on 10 contracts. That's $100 a day, guys. Facebook, good name to trade if you had a small account. Spies, the Qs, good name to trade if you had a small account. Let's see what I got. Netflix, maybe not. AMD, yeah, AMC, Roku. It just depends. There's a lot of names that work for small accounts. I would say almost all of them. Maybe not Amazon, but the rest of them definitely do. Someone mentioned something about holding longer. I don't think with small accounts you can. I don't think you need to. Remember, you don't need to hit home runs. If you're trading consistently, and this is a small account or a big account tip, if you're trading consistently, and let's think about this in baseball terms as a batting average, and you're just getting base hits, and you're just getting base hits, and you're just getting base hits, you're going to make it. You don't have to hit home runs every time. Base hits, base hits, base hits get you into the Hall of Fame. Now, if you're consistent and you're hitting and you're hitting and you're seeing that strike zone, guess what's going to happen? You're going to get a fat pitch every now and again. You're going to buy, and it's just going to be a normal strategy, and you're going to take it, and it's going to rip up. And if you're just used to making 10 or 20 cents, you're going to be up a point plus. And you're being like, oh, I'm going to sell half and hold this. And I'm going to go down the risk slide. If you don't know what the risk slide is, I don't have a picture or a doodle up, but it's basically where, if I buy 10 contracts in a name and that contract goes up 20 cents, I sell 5 of them, and now it would have to drop into the negative more than just flush for me to lose. So it's much easier to take and hold money, especially in a small account, and to hold a runner if you sell 50 to 75% of your trade as soon as you're green. So as soon as you're 10, 20 cents up, you just sell 75% of it, and then you hold 25%, and maybe that 25% runs for another 20, 30 cents, and then you make, more money on that. So that's the risk slide, and it's like as you sell more, there's almost no risk in a trade. So sometimes you can have literally zero risk in a runner that you're holding. So I don't think you should really focus on holding longer. Hey, puppy. I think instead you should just focus on making good trades, getting green, scalping out, and as time goes and as you get more consistent, you'll learn when to hold longer, as opposed to forcing it or trying to catch bigger moves with a small account. Let those small things add up. Yeah, somebody talking about size. One contract should never wipe out an account is completely true. Your size, like if you're gonna lose in a trade and you're done, then don't take that trade. You should definitely size appropriately to your account, and you can look at options and how they move and do what I said at the beginning of the video to kind of figure that out and to find the options and stuff that you like and how they do. And the reason we trade options instead of common, in case anybody doesn't know who's watching this maybe on YouTube or anywhere else with a small account, and this is what made these strategies so effective for me, is that in a big account it takes or in a small account it takes 3 days for your settled cash for your cash to settle. So you can only trade 1 or 2 days a week when you're trading, excuse me, in common. In options it settles every day, so I can every day take the strategies and the names that work, as opposed to only doing it once or twice a week. Who knows if you win? Who knows if you lose? So these strategies and this style of trading is extremely, I use the word easy, but is extremely beneficial for people with small accounts. And honestly, I would recommend this to anybody to try. So let's look. So let's see. Let's see. I've got, give me 1 second. I'm just pulling up a Tesla chart, and just to show you guys something. So when I say like a strategy, like first green takes red in Tesla today, bam. Second green takes red in Tesla today, bam. Third green takes red in Tesla today. Fourth green takes red in Tesla today. You could do a strategy like this with one contract and probably make money, I don't know, a decent amount of the time. But that's something to look at. For a small account, I would recommend that strategy. If you're looking for a specific strategy, backtest the green takes red every day on different names. Find names that it works on, 2-minute time frame, and do that. Tight spreads are definitely a thing. Having a broker with good price improvement that gives you good fills is definitely something you need as a small trader. I recommend Fidelity. Apparently E-Trade's decent. I recommend to myself, like I don't care what you do, but I find it a great platform. I'll be doing an updated Fidelity video on how it works pretty soon. So yep, and Gasha says learn to dump trades super fast. That's hard to do with a small account, and I didn't mention this. Learn to dump trades as soon as they don't work. The biggest benefit you're going to have as a small account trader is if you can limit your losses by instantly, if it doesn't work, accepting those losses right away. Right away. Get out of it. If you do that, you'll be okay. If you want to hold a losing trade, that's when you're going to blow up and lose everything. You're going to go up to, this has happened to me, so I'll use me. You're going to go up to $12,000, and then you're going to go down, and you're going to lose and maybe you're down $500 or $800 that next week, and I got to get this back, and you're just thinking about the money, which is not what you want to do, and you're going to take a trade. Maybe it works, maybe it doesn't. Like, it's going to come back, and then it's going to rip against you, and you're going to be losing, and then you're going to be down more than you thought, and then you're just going to be down on yourself, beating yourself up, and then you're back down at $9,000 or $8,000 or whatever it is, and like, oh, come on, all that work, it took me 2-3 months to get here, or whatever it is to get here, and I just gave it up. That's mentally defeating, but you have to be resilient and you have to stick with it, and you have to learn from that mistake, and you have to push through. You can't come in to you can't come into the market, and you can't come into this with a quitter mentality. They say a black belt is just somebody, a white belt who never quit. A successful trader, most traders fail. The traders in this room that I find that continue and that do the best are the ones that can adapt, and the ones that can lean into the strategies when they're working and are persistent. And I don't mean negatively persistent, but adapting, and the people that are persistent. And if you can be persistent, and if you can find something that works from you, if you can follow the instruction, if you can identify your strengths and your weaknesses and how that plays into the market and how the market works, and how you can use that for your benefit, you're going to be okay. You're going to be able to grow and to be able to learn and to be able to make money doing this. Remember, $100 a day gets it to where you can do this for a living. That's not a lot of money. If you can be consistent over the course of your life, you can make $100 a day, and then sky's the limit. I'm not saying you're going to do what I did and make 6 figures in a month, and there are other people who have done that and more than me, but excuse me, but you can get to that level, and you can do it if you don't get tunnel vision and get sucked in and start focusing on the money as a small account trader. You focus on the setups, finding things that strategies that are effective for you, strategies that work. Don't try to find the next thing that's going to make you big money. Don't try to hit home runs and overnights. Don't try to look at every little thing that's, and I got to get this, I got to get this. Simple, easy, effective strategies that can make you a little bit of money a day. Take those base hits, base hits, base hits, base hits. You get a random double, base hits, home run. Don't try to hit another home run the next day. Base hit, base hit. Oh, another fat pitch, home run. Take, you get a strikeout, you get an out, pop out. If you bad, that's fine. Hey, just smack those little base hits. Be consistent. That is what you need to do as a small trader to get yourself up there. Look at what you need to do over the course of a year to get your account to 25,000. Think long-term gratification, not short-term. Think long-term success, not what can I do in the next 2 or 3 months. If you're going to do this, this is a lifestyle. It's a mentality shift. It's not something that's just a quick make a quick buck and stop. If you want to do this and you want to put the time in, think long term, think strategically, and start making the changes you need to make to get yourself there so you can be ready to make those trades. $100 a day adds up. $500 a day adds up. $1,000 a day adds up. You don't have to do it all overnight. So as far as in the short, as far as just for the first video on small accounts, and I'd love to get some of the other rotation crew people in here so we can talk about it. But are there questions that I didn't cover, or questions that you guys have about small accounts? Specifically, some of the people I know that are here that have them, or did I answer some of what you said? I've got to give people more heads up before I do these videos so people can ask questions, and maybe during the trading day be like, hey, come with questions tonight. Okay, that was most of what we talked about beforehand. So, if I was doing strategies, Tesla not the best name, although you could see each strategy work here in Tesla. Today, I could go to another name, so I'll just quickly cover this. This is a 2-minute chart. Let's go to a 1-minute chart. This is a Mark 1. I'm sorry, this is a one and done. You had a strong green candle closing towards the top. We don't do one and dones a lot. They're very risky. Maybe you don't do this as a you don't do this probably as a new trader, but here you go. You got one right here. You pull down, you hit, that's VWAP, that's not the 8. You get, here's your mark 1. So you had one and done, it broke up. Here's your mark 1, here's your M1 right here. Look at that, boom. You buy the first 1 minute breakout after a pop and a pullback. It did hit VWAP, you got your breakout. Here's another, this is not really a M1, but here's another one that works right here. This is probably a green takes red if I go to the 2 minute. So I'm just showing you how you could trade this in Tesla if you wanted to trade Tesla as a new trader. Yep, that is the green takes red. So you had a green takes red happen. There's your pop. So it failed here and then it went back through. I actually did trade this, so this went through and then this happened. You could trade these breakouts, you could hold it, you could have sold it. So that's 3 strategies right there. You had a one and done, you had a mark 1, you had a green takes red, and here's your first know your limit 8. First time a know your limit 8 works. It worked. Bam, look at that. You can make money right there. 8 EMA, bounced and hit. And let's see. There you go. So if you're a trader in this name, Tesla's hard because the way it trades, it would have been easy to lose on these. But just that right there, 3 or 4 trades and you're done. Let's check another name really quick. Feel free to call out a name if you want. If you're in chat and you want me to look at a name. Facebook looked sus with this here, but you had a one and done, and you don't have a mark 1 until here. Facebook pops. You could have made a little bit here. It didn't continue. It went back down. It hit the 8 EMA, pulled down below it. This would have been kind of a sus because of how this happened, but the first time it breaks, it broke. You could have made 10 cents on that for sure. Guarantee you could have made 10 cents on that. Pops back up again, pulls back down. This isn't a reset, so there's nothing else here. So as far as strategies go, you didn't get elevated volumes. That would be it on Facebook, but you could have made money on the first. After it hit the 8, you could have made money there. And if I go to a 2 minute chart, you could see, let's see when the first green takes red happens right here on the 2 minute chart. You could definitely make money, and this is a 52 to 53, a dollar move in Facebook. You can make 10 cents on a dollar move in Facebook, 20 cents on 10 contracts. Let's check RBLX really quick. RBLX to the short side. All right, so RBLX to the short side definitely could work. So it gapped up. So technically, C strategy gapped up. You wouldn't want to play it short. You can if it's failing and stuff, especially once it breaks down. So you could do the C strategies in reverse. They do work in reverse. You have this breakdown here. It pops up. If you were short RBLX or you wanted to be short RBLX, and you thought it was going down because it was trading below day lows, here would be your first strategy. Excuse me, your first 1 minute breakdown after. So it went down, it triggered down. You think this is bearish. So you're like, oh, this is bearish. You could trade it when it pulled back up to here on this trigger short. This would kind of be a know your limit 8 short here. And you can see what RBLX did. Gosh is saying after 10 o'clock. So RBLX went short. Here it failed. If this was on your chart, what you're waiting for now is for it to hit an 8. So it pulls down, it hits an 8. Here's your first breakdown after an 8. That's a little scalp there. You could have scalped that short. Chop, 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 chop. Let's see, hits the 21. Doesn't look like it was super weak in here. It's kind of consolidated for a little bit. Oh, this is the 2 minute. No wonder. Here you go. So yeah, we don't play the 8 off the 2 minute as much. So look at this. After it goes down, you could play pretty much every 1 minute break. So it goes down, pops back up, 1 minute breakdown, pops back up, you buy the 1 minute breakdown, goes flat, you buy this 1 minute breakdown, comes back up and hits the 8, you'd buy that breakdown. You definitely could have made money in RBLX today. NVIDIA, Microsoft. I'm doing this. I think today was not a good day. As far as for longs, generally I don't trade puts as well. NVIDIA pops, it breaks out, so that's kind of, hey, NVIDIA is a name to trade. Mark 1, no. Your first Mark 1, you probably would have lost, honestly, just being honest, you would have lost on this. If you lose on this, you shouldn't play these next breakouts. I talked about this in a previous video. You Here's your breakout. Let's see if this was a 2-minute. Yeah, that was a green takes red. So 1-minute breakouts weren't working. You either have to wait for a green takes red or you have to wait for a moving average to hit because your Mark 1 didn't work. So if you were trading NVIDIA early, you probably lost, and you would have had to wait for this. So you would have lost in a Mark 1 on NVIDIA. You wait for the green takes red. You could have taken that and definitely made money. Here's your next green takes red. And you get a green takes red here. You probably can't make money on that. Maybe you can, I don't know. So yeah, early on NVIDIA could have worked on the 2-minute. Looks harder on the 1-minute. Yeah, I would have had a hard time trading NVIDIA on the 1-minute actually. I would have traded it on a 2-minute time frame. So NVIDIA is a hard name to trade. For me, it's a hard name to trade. Microsoft, looking at the 1-minute, it broke up. Here's your Mark 1 right here. Look at that. You can definitely make money on that. Pulls down. Here's your Mark 1, and here's another Mark 1 in Microsoft. Pulls down again. That's harder. I think it hits the 8 there, or the 8 leans in. That would have been hard. Pulls down. You might have taken a front run loss here, if we're being honest. Here's the first 21. Doesn't look like any of these broke out. You probably take a front run loss here, to be honest with you. But if you buy it again here, because it never broke out, so it just would have been a front run loss. Here's your actual 21, and look at that pop. $50 as that coincides. Let's see, 10 o'clock with the green takes red. So if you're noticing something and you're a small trader, look at these green takes reds and how they work. See, 10 o'clock. Look at this. So look at this green takes red there. So you go here, green takes red, pop, green takes red, green takes red, green takes red. And then it's kind of failing down here. Market started pooping. You probably wouldn't be going long here if I remember correctly. So yeah, if you're really and front running is not a front running is getting in before the strategy triggers. It's not a failed strategy if you lose on a front run. That's just you guessing it's going to go through early. I do it all the time. It's the easiest way to make money, but the strategy doesn't fail if you front run and lose. The strategy fails if it prints higher and then pulls down, just so we know. Apple and GME. The last two I'll do, and then I'll call it for this video. Apple, great name today. Pulls up, down. There's your, I think that's a Mark 1. 08, 06, 08, no, 06. So this one technically is your first one here at 9:38. Your first breakout. Looks like it could have been choppy. I'm not sure how this traded. Looks like it popped up and pulled down. Depends on how the options moved here, but you can see this moved after it triggered. Apple's a name that you could hold a little bit longer. I would have made money here. Honestly, I probably would have bought around here somewhere, and I think you could have made money here as long as you had the right option. Here you go again. This is more of a 1-minute breakout because you don't have elevated volume, but in a strong name like Apple was this morning, you should take this, at least if you're following the strategies. Here's your 1-minute. Apple kind of chops around and then goes up. I think it was possible to make money there. You don't have a know your limit 8. Oh, this is a 2-minute. Sorry, this is 2-minute. So I'm looking at the 2-minute. My mistake. So green takes red. Green takes red. Look at that. Green takes red right there. If you just bought that, wait for a 2-minute red bar in Apple and buy it. Look at that. Next one, you get another move. And then you actually get another one here. You could have scalped. You got another one here. That would have been a lot harder. You probably don't make money there. But you just see that right there. Let me check the 1-minute really quick. One minute in Apple. Pull down. Here's your Mark 1. Could have made money there. Looks kind of choppy. Probably would have lost if you tried to hold, but you could have made a quick couple cents on that pop. Here's the next one. You could have taken. Kind of choppy here. This would have been your first 8 test, so you could buy that and make money. Yeah, and then here's another 1-minute breakout. Apple would have been a little bit more difficult C strategy wise. I think it would have been more of a wait for that 2 minute red bar on the 2 minute. It would have been harder to trade here just because of how slow it moves. Apple is difficult to trade if you're expecting it to trade like Tesla. GME, another really hard name to trade, just because of how it moves. I mean, if you're buying the 2 minute and you're holding, you're fine. Here's a 2 minute. Green takes red. Green takes red. That's not a green takes red. There's your green takes red. There's your green takes red. So you have some green takes reds that work in GME. I wouldn't trade GME with a small account most of the time. I mean, look how big these candles are. You're really going to be able to hold that whip. If you would have, this would have, you would, if you were playing GME with a small account, you probably would have lost on a few trades here. Even on a big account, maybe you make it here. You make it back here. You probably take a lot of front run losses in here. This is an ugly, hard to trade chart. But again, small account, that 2 minute chart, green takes red. I'm telling you, back test it. Try it. Prove me wrong. Find names that are effective, that we trade, that work, that get good options and stuff, and find a name that's trading above the first 2 minute high and a green takes red triggers. I find it extremely, extremely effective. Do I know my Wi-Fi speed? No. I could Google it. I mean, I could look at it. I knew it before. I just don't remember it off the top of my head. I do have the fastest that Comcast allows me to have. So whatever that is what I have. I don't think you need that, but you do if you're doing it for a living. If you're really doing this, you need the good Wi-Fi and the good stuff. For me, I've done it off. I'm wired in, so I have Ethernet, so I'm wired in. But I've done this on a laptop off over Wi-Fi. I just don't like it as much. It's Wi-Fi can go down, something like that in the middle of a trade. I've had it go down in the middle of an Amazon trade before, and that was scary. So I try not to trade on Wi-Fi. I take Ethernet cables everywhere with me. I check Airbnbs before I stay there to make sure they have Ethernet if I'm going to be trading. But I don't have my numbers with me at the exact moment. So anything else? Any other questions we have about beginning trading? Again, maybe I'll do another video on this in the future with some of the other guys that are in here. But guys, to be honest, it's not that much more complicated. It just takes longer, and you're seeing people make money around you, and you want to make money. And the mental part is the hardest part, and the mental part of just wanting to take to take trades and to want to take more trades and to pick the right trades. And a lot of that is with you and with confidence and the strategies and knowing what you trade really well. I mean, I probably started with like 1, 2, and 3 contracts, and I sized up to 10 really quick. So for me, I wish I had like a I just did it. I'm just like, I'm doing it. I don't care. And I have the mindset to do that with stuff. It's like, I don't care. I'm doing it. And that's not very helpful for people. Um, like, I mean, you want to see me buy 100 contracts? Never done it before. Let's see what happens. Like I have that in me, I guess. So I just did it, and I did it with smaller. So here's I'm thinking through it. So give me a second. I'm thinking. Um, what I did is I traded smaller names like Apple, because if you're used to clicking the button that says 10 contracts, you'll be used to clicking the button on a bigger name. Not a ton bigger, but a bigger name. Let's say like Apple to Facebook. Facebook moves quicker than Apple. So if you can click that button with Apple and you can do it enough times and you just train yourself to click a button and not look at the contract size, then you eventually just get comfortable, and then when you jump to the next name, you just click it because you're not thinking about the money, and you're training yourself not to think about the money. It's about the strategy. I just take 10 contracts. That's what I do in every name. So you just take, 5 contracts, 2 contracts, 3 contracts, and there's definitely a little bit element of crazy in there, because you can get wrecked in it, and there's an element of just doing it. But I trust the strategy so much that to take 10 contracts on something that has like a 2 to 3 cent spread isn't very hard. Oh, I know what you mean. Yeah, I take no insult. Um, and at least it's not very hard for me. I don't want to speak to others. But if you can get used to the contract size and names that aren't crazy, I'm using Apple as an example. So if you can get used to buying and selling Apple at 10 contracts, for me, that made it easier to go to Tesla and buy 10 contracts because I didn't think about the money. I just thought about 10 contracts. And so that's one way I did it. Thinking back at it now, is like I was just used to buying 5 to 10 in something. Yeah, you're correct. Volatility wise, it's different. If you're buying 10 to 20 to plus, if you're buying 20 in Apple, it's worth, 1 in Amazon or something like that. So you could do that size differently, but I just don't think about things like that. And I just trained myself not to, in a sense, over time. And I tried to kind of get to that way of thinking and that way of acting. So, except for Amazon, yeah. I take 10 to 30 contracts in pretty much every strategy I trade right now. And there are some names like Apple and Facebook and other things when AMD or something, I might take 100 contracts because 100 contracts in Apple, if you're risking 10 or 20 cents, if you're trading 30 contracts in Tesla, you're risking two to $3,000. You're risking $1,000 when you buy Tesla with 10, let alone 30. So the risk reward, I kind of, you know, scale to that. Generally speaking, when I take trades, my risk is 1,000 to 2,000 mentally on every trade I take. I know I expect to lose that, and I kind of size accordingly. But I don't think about it actively anymore. I just take the same size. I don't really. I never go up in size on names because if I start randomly trading names with heavier size, that means I'm thinking about the money. And you can make 5 figures a day trading 10 contracts. I think my biggest day this year or some of my biggest days this year have just been on 10 contracts, just 10 contracts in and out, just consistently. Strategies are working. You're just 10 in and out, 10 in and out, 10 in and out. And that's all you got to do. You really don't have to size up. Sizing up doesn't make you a better trader. You know, it just means you can lose your money quicker. But generally speaking, I take the same size and maybe I buy more. I don't give a lot of thought to my like scaling my size that much. I'm very comfortable with where I'm with just my general size. Yeah, that would be a decent that would be a decent way to do it, and you could if you wanted to. I'm not telling you what to do. Um, and I don't, and I'm not disagreeing with Brent, but I don't think about the money at all. And it's not that I can afford to lose or that I can afford to win, but it's almost take the size to where you don't think about it. And if taking 10 contracts is going to scare you, at some point you just got to suck it up and do it if you're trying to get bigger. But here's a strategy. Sorry, here's one final strategy, and then I'll end the video with this for sizing up. Is where are you at? So you want to get to trading 10 contracts. Are you trading 2 contracts? Okay, do not jump to 10. That will wreck you. Trade 3 contracts. So if you're trying to get to 10, think strategically, think long term. So trade, if you're trading 2, trade 3. Trade 3 for a week. Next week, trade 4 by just moving your little default clicker. It's not like you're actually manually entering them. You just, change your hotkey. And then you're trading 5 the week after that. And then maybe you're trading 6 the week after that. And so you're sizing up slowly, and you're sizing up in an amount that where you're not going to notice the wins and the losses right away. So if you go from 3 contracts to 4 contracts, you might not notice much of a difference. You might not notice a difference between 5 and 6 or 7 and 8, but then before you know it, you're going to be at 10, and you're like, oh, nice, and you're not even going to think about it. So do it in a way where you don't think about it, by making sure the size is correct and that you're not sizing up more than you can mentally handle on a trade. But then two, that you're that you're that you don't do it all at once. And if you're trying to get to 10, do it 1 contract or 2 contract at a time, and that will kind of help you get there. So if that's something you're trying to do, I have used that before. I didn't go from 10 to 100. I didn't go from 10 to 30. I was like, 5, 10, 15, and then 6, 11, 16, and then 14, and stuff like that. And that's how I personally did it, along with just like forcing myself to do it on smaller names. And then I got used to seeing the contract size, and it didn't make a difference. And eventually it didn't to me. I don't know if that will work for everybody, but that definitely worked for me. So as far as the video, I don't, unless there are other questions, I'm going to cut us on YouTube. We can still hang out, we can chat, but I'm going to end the video here. So thank you guys for hanging out, for watching the video, for taking the time. I know it's a lot of your time. This is probably the only video I'm going to do this week. It's Thanksgiving. I'm not going to trade much this week. I'm going hunting, for most of the week. Going to spend some time with family who's coming into town, so I'm going to do some of that. I'm not overly, going to be on the market that much or trading that much. But if you do have questions about small account trading, about ways you can improve, if you want to try the strategies that we do, anything else, feel free to hit me up, message me. I appreciate it. And if you want to help me out, leave a like, subscribe, comment, share the video with your friends. Let them know what we do here if they're interested in it. This doesn't take a rocket scientist to do this. It just takes consistency and a little bit of focus. So I appreciate you spending your time here, and I will see you all next time. Have a good evening.